Welcome to Trading Lounge and the European indices. We'll look at the DAX, the AEX and the FTSE, and with the DAX here on the daily chart, just exploring the larger picture here. This is minor wave 4 and then minor wave 5 here and intermediate wave 3. So we're looking for an A and a B and a C for intermediate wave 4 that would normally pull back 38.2% of wave 3 from wave 2 to wave 3 here, or to the wave 4 of one lesser degree, and normally they're very close in that case. The obstacle here though is that wave 4s can be rather complicated and rather messy. I've drawn it out in a very simple fashion here with 5 waves in wave A here, 3 in B and 5 in C here. Will that happen? I don't know, but we'll just start with that. With wave 4s, it's where you can get a whole range of, there's 12 different types of corrections, and most of them can occur in, all of them can occur in wave 4, where normally wave 2, the other corrective pattern, is normally a simple zigzag correction. This could be a triangle pattern here, it could be an expanded flat, could be a double zigzag. There's a lot of things that it can be in here, but yeah, the good news though in this correction is from the top here, the first leg down here, we're starting to confirm 5 waves in most of the European markets. Now, because we get 5 waves in the first move here, that means after an ABC correction for a rally here, then we'll see another 5 waves coming in here. And this 5 waves will be important because it will be a third wave and it will move rather quickly, and it's the one that we want to catch. So we need to build some longer term positions into this wave 3 here. I mean, over here we had wave 1 and 2, and then this is all the third wave here, and a fourth and a fifth. So you can see that the third wave is more powerful. So we'll just we'll work with that, but building a trade into that is what we need to be doing. So in the 4-hour chart here, just let me get this into perspective here a little bit rough here, but this is kind of what we're looking at. The good news here is we've got 1 and 2 and 3, wave 3 here, and then wave 4 for a rally, and we're looking for wave 5 to come down. How far will it come down? Well, if the extension's in wave 3 here, normally wave 1 and wave 5 are the same, well, as a rule of thumb, and just as a guideline as well. There's a couple of important points here, is that the 13,100 here will be important as support, and of course also the 13,000. If it bounces to the 13,000 here, then the 50 and 60% retracement level is up here, and this is where we want to be doing our shorting from in here. So really sort of none of this sort of low into here and all this up here doesn't interest us too much, but of course we can certainly trade long. If we can really nail down from wave 4 here in green down to wave 5 here, if we can nail the 5 waves in that particular structure, then we can buy off the low and then move up for wave A here. Wave B will pull back 60% of wave A, so it's really, we need to take profit in wave A. And then wave B here can be simple or it could be complex. Simple is just 3 waves, or it could be like a wave 4, because normally in a correction, if wave 2 is simple, then wave 4 will be complex, and that happens most of the time, but sometimes we get wave 2 that can be complex and then wave 4 that's simple. But it's the same in corrections as well, that alternating between wave 2 and 4 being corrective or simple. It's the same in corrections as well. If the first leg is simple, then the next one will be complex, and then simple or more complex. So it's always rotating. Moving into the 1-hour chart here, just to look at a little bit more detail, that sort of makes it a little bit clearer here, doesn't it? Sort of as the pattern here. So we've got this nice 5 waves down here for 1 and 2 and the third wave and the fourth wave, and so now we're in the 5th wave, which would expect it to drop further through here, but it's going to have problems because of the old low here and also the 100 as well, because a market moving through a price point like 100, it will navigate it through of being support, bounce, then break through it, then the retest of it, and then come down again. So it needs to migrate from being support to resistance and then down. But look, this is just a rough sketch here, but don't worry about these guys here. They're just waiting to be used. But yeah, so this is where we are. So it's really this one over here that we're looking for here. On the tick chart here, the 100 ticks, we can start moving in on this a little bit. I just need to get a bit more data in here. See what 1,000 looks like. Let's go, whoops a daisy, it's too much, but that anyway, that would do. So look, this is a bit messy, but it's sort of where we sort of drill down and work into things. So we knew we had 5 waves in here, so we knew that after a correction here, didn't quite come back to the 50-60% mark here as an A and a B and a C, but then moved down through here. So yeah, all good at this point. So we're counting down, bring this in here. We're moving down here as 1 and 2 here. Nice third wave with 5 waves in there. Wave 4 and wave 5 here. And then last time we spoke, we were looking at wave 4 moving up to the wave 4 of 1 lesser degree or to the 38.2% retracement level. It fell short of those there again. So it fell short up here just by a tad and also fell short here. So that can be a reoccurring theme now with this. So just be mindful of that, because what we normally see in the first leg down in all of this structure here is really the fingerprint of the actual rest of the correction. So all these little details sort of add up to knowledge and sort of, yeah. So what we're looking for here, last time we spoke, we were looking for the market to move up into this space, but then if the 200 here, because all this is group 1, 100, 200 and 300 here is all group 1, and we know that once 200 becomes the retested resistance, then we know that we end up down to the closest largest number. So we were looking, I drew this here off for the downside. So I moved through here, the break, the bounce back up, the move through it, the retest here is important. Then we get our reference point here. So on a very sort of subtle picture just in here, we can see that the market came through here and then it came back up and tested here. So I've just taken this low. You could have gone into this low as well, and you could have even worked this low here as well for the breakthrough, but I always just, use the endpoints, so, but you can always refine what you're doing, and yeah, so that's what the entry looks like, but you know that, but I just need to repeat it for new folk that are coming on all the time. And so from wave 4 here, we're looking for 5 waves down, and we'll use this as wave 1 here, and back for wave 2 to this point, because this one's only got 3 waves down, so I can just assume this is to wave 2 here, and then we'll be looking at, there's 5 waves in here, so 1 and 2 and 3 and 4 here and 5 here. So this one here will be the 3rd wave coming into here, and then there'll be a 4th wave bounce here, and then there'll be the 5th wave coming down here. So I can't draw on this side of the chart, as you know, but expect a bounce off here, and then this will come, the bounce will come back to the wave 4 of 1 lesser degree, which is here, or the 38.2% retracement level. So I'll just take it on the level there. And grab that. So we can take the top of that, and then that's the 38.2% retracement level here. So that's where we can expect that market to move down to here, bounce back to here, and then make another move through here. Okay, and then that will give us our 5 waves down from the top down to the bottom here, and then we can look at the rally point. I don't know how far this is going to drift down. I don't know if we get to the 13,000. It will be like a magnet because it's the closest largest number, but I need to have a look at the structure once the market starts playing out the 100 here, because it may just come down to the 100 and then move back up from that space there. And coming into the 100 here, we've got 10, 20 and 30, then the midpoint 50 in here, and then the 80 in here. We've got group 2 in here as well. Won't need to go to that there just yet, but also in here as well, 10, 20, 30, 50, and then 80 here. So they're just the Fibonacci numbers, 1, 2, 3, 5, 8. and then we go back to 1 again, to the next whole number here. But obviously the Fibonacci numbers would go from 8 to 13, 21, 34, but 34 is important, but would gravitate towards 30 in that case, wouldn't we? Then we go to 50, after 34 is 55, but 55 is important, but 50 would be more important in psychological terms. And when I'm talking about psychology, I'm really talking about where people place orders. So it's really about the volume, and some numbers attract more than others. So people would think of 10 rather than 9 or 11, so some numbers become stronger in that sense. Okay, sorry to wrap it on, but go to the Netherlands and the AEX here. So this is the same pattern as the as the DAX. So basically we're looking at wave 5 being in place here, and then that wave 5 of 3 here. And so once again here, our main objective here to get this right here would be, in a nutshell, to short that there. If you're going for the longer trade, that's where that would be. But obviously we can refine that too. So, but it's just nice to have something. Because sometimes not everybody trades intraday, and the other thing too, trading end of day is kind of simple. Of course, you can refine things, but in your refining, you end up pushing too many buttons as well. And so 1 hour chart, just to look at that there. So what I have made a change here, but the change is not really in the count; it's in the labeling. So I've got this as green, 5 waves down, because last time we spoke we had them in grey here, and we were looking at this point here because we only had 3 waves down at that point, and I mentioned that we really need to work out if we're going to get wave 4 here and then wave 5, and that does seem to be the case. So I think we can just sort of run with this now. And so once this finishes down here in line with the DAX, then we can look for the ABC correction in here. And of course wave 2 is always the best place to get options to get into the 3rd wave down here. In that case they give the best gearing, well, they used to. I haven't looked at options for a long time, since the late 80s actually, so I don't know if that's still the case. So well, that's that. So that's all pretty sort of simple. And over to Legoland, over to the FTSE here. And with the FTSE as well, it's been pretty much the same case as well. So from the top here, we're looking at wave 1, wave 2, wave 3, wave 4 here, and then down for wave 5. Now, I'm not quite sure if this wave 5 low is in place already. We've only got a 3-wave rally here. The closest largest number is 7,450. So I could say to you that if 7,450 became the support, the 50 became the support, then we're into the rally at this point, okay? And then you can look at your 61.8% retracement level and so on, which we'll do that next time we speak. But there can also at this stage be one more move down here, or it can move up here. But if it's going to move up here, if it makes a new high above here, then above that current high, then we're going to be got that lows in place then. But if it doesn't and it drops from here, which is likely, then we're going to be coming down one more wave here before we do the A, the B and the C here. But I'm not really interested in this, and nor should you be really. It's this, we can trade this up here, but it really is this 3rd leg here. I think planning for that is where the money's going to be. All right, I'll leave it at that. Thanks for tuning in. Cheers.